Ladies and gentlemen, we are standing at the precipice of economic history. Here we go again. Another skyscraping headline, another all-time high for Bitcoin, which is now flirting with levels beyond $100,000, a staggering figure that seemed out of reach not too long ago. If we step back and take a breath, the cryptocurrency that many dismissed as a passing fad is turning Wall Street on its head. But before we pop the champagne or declare Bitcoin as the new gold, let's examine closely, very closely, what this all means. Are we witnessing the birth of a new financial empire, or are we dancing precariously on the edge of yet another bubble, ready to explode at any moment? Our story begins with Donald Trump's unexpected shift in his stance on digital assets, particularly during his presidential comeback campaign. For years, he was the ultimate crypto skeptic, famously calling Bitcoin a scam and ridiculing it as based on thin air. But now, fresh off his election win and poised to step into the White House once again, Trump has surprised both friends and foes by embracing the crypto sector as a pillar of futuristic economic policy. The crypto market, in a frenzied twist, loved the news. Bitcoin surged to a jaw-dropping peak of $103,800, shattering records and shaking up financial analysts who have traditionally sided with skepticism. Venture capitalists, Wall Street titans, and even policy wonks are suddenly looking at Bitcoin with fresh eyes, with Trump promising regulatory wet kisses in place of the Biden administration's crypto crackdown. Brian Quintenz, the head of policy at A16Z Crypto, division of Andreessen Horowitz, is emerging as a likely future head of the Commodity Futures Trading Commission, CFTC. Now, this is a guy with deep roots in both Washington and crypto, and his nomination signals a major tilt toward the industry's favorability. Let's not mince words, this isn't just about Bitcoin or one politician doing a 180-degree shift. Nope, it's much, much larger. There are seismic economic forces at play here, and Bitcoin's rally above $100,000 is just the tip of the iceberg when we consider them. There's no denying that weaker or looser regulations tend to prop up market exuberance. Trump has always styled himself as a pro-business president, and his newfound influence over the future trajectory of cryptocurrency reflects his ideology of minimal oversight. Trump has publicly suggested the creation of a national Bitcoin stockpile, an idea that screams out, cash in on this innovation, it's the financial frontier of the future. Whether or not this idea gets off the ground is another story altogether, but just mentioning it sends a clear signal to the market, this administration is willing to ride the crypto wave. The crypto roadmap under Trump's second term in office looks markedly different from the crackdown atmosphere that prevailed under the Biden administration. Markets are forward-looking, and when traders expect friendlier crypto regulations under a new administration, it triggers a rally as we've witnessed. If Trump does indeed bring in looser regulations for the crypto sector, it's likely to bring about a short-term trading boom, lifting not only Bitcoin, but altcoins and associated blockchain technologies. However, this doesn't mean that the risks will go away. A light-touch approach can lead to rampant speculation. We've seen this movie before during the dot-com bubble of the late 1990s. Beyond politics, Bitcoin's price movements are supported by macroeconomic forces that go much deeper than regulatory whims. Take the Federal Reserve, for instance. After months of aggressive tightening and rate hikes to tame inflation, the latest inflation numbers have come in lower than expected. Inflation looks like it's moderating, and that's got investors banking on potential interest rate cuts in the near future. Now, why is this relevant to Bitcoin? Simple. When the Fed cuts interest rates, riskier and growth-oriented assets like technology stocks and, yes, cryptos, generally get a boost. Think of it like this, low interest rates mean cheaper borrowing, and when money is cheap, speculation thrives. The demand for alternative stores of value, such as Bitcoin, becomes more attractive, especially since Bitcoin is viewed by many as the digital equivalent of gold. A hedge against fiat currency devaluation. As speculators flock to Bitcoin at $100,000, hoping that the Fed will turn dovish, it's important not to forget the risks this brings into play. If inflation stays stickier than forecasted, or if rate cuts don't materialize, the entire premise, Bitcoin growing because of easier monetary policy, may crumble in an instant. Trying to figure out if $100,000 is a ceiling or a floor, says UTXO Management's Henry Elder. Ain't this the $1 million, or should I say, $100,000, question? Looking at historical patterns, crypto markets are notorious for their volatility. Just as Bitcoin can skyrocket to unprecedented highs, it can nosedive in days. Bitcoin's rapid rise is eerily reminiscent of past speculative bubbles, most notably the 2017 crypto market's enormous enthusiasm and subsequent devastating crash, after Bitcoin reached $20,000, only to plummet 80% in the aftermath. Is this time different? Well, Bitcoin believers would argue that the global understanding of Bitcoin's fundamental value is finally coming of age. Institutional investors, they claim, are behind the recent surge. Recent inflows into spot Bitcoin exchange-traded funds, ETFs, seem to support this notion, with some $11 billion rushing into those ETFs just since Trump's electoral victory. But let's not kid ourselves, the risks of a bubble are massive. Despite institutional investment, the underlying structural market can still get overwhelmed by good old-fashioned speculative frenzy. While it's tempting to think that Bitcoin's climb to $100,000 is just the beginning of a new normal, there are multiple roadblocks on the journey toward sustained mainstream adoption. Although the Trump administration may backpedal on regulation, various countries and regions continue to impose stricter oversight on the crypto industry. Europe, for instance, has been pushing forward the markets in crypto assets regulation, MiCA, framework, aiming to bring digital currencies within the regulatory fold. While it may seem like America is gearing up for looser policies, the global regulatory future is mixed, and inconsistent approaches across regions may create friction in a market that, by its very nature, transcends national borders. Yes, Bitcoin prices may be booming, but so is the scrutiny over its environmental impact. Amid growing pressures to counter climate change, Bitcoin's energy-intensive proof-of-work mechanism has come under fire. Countries like China cracked down on crypto mining specifically because of its environmental footprint. Elon Musk made headlines in 2021 when Tesla briefly accepted Bitcoin as payment before reversing course due to environmental concerns. While the industry is exploring more energy-efficient alternatives like proof-of-stake, the reality remains that policymakers and major corporations will continue pushing toward greener forms of value exchange. Will Bitcoin survive or adapt to these pressures? Trump's vision of a national Bitcoin stockpile gives us a hint that Bitcoin may be coming into the fold as a legitimate part of national economic strategy. However, let's be honest, Bitcoin is still fundamentally volatile compared to traditional fiat currencies like the US dollar or the euro. Governments are unlikely to cede control over monetary policy to a decentralized currency without resistance. In the court of public sentiment, Bitcoin is riding high on optimism about looser regulations, lower interest rates, and long-term global adoption. However, beneath the shiny veneer lies a highly speculative market, one that could implode as quickly as it soared. Trump's second coming may signal great things for the crypto market in the short term, perhaps even a sustained rally beyond $100,000 for Bitcoin. But brewing economic risks like stubborn inflation, potential mismanagement of regulations, and failure to address Bitcoin's long-term sustainability could quickly wipe out these gains. Even as we witness Bitcoin's headline-grabbing highs, we must ask ourselves, what comes next? For every sector booming today, history tells us that bubble-like characteristics often end in tears. Let's keep our heads level-headed, folks. Because when things get this high, the crash hurts all the more.